So today I want to focus on some of the changes I made within my Trading 212 account, and it's mainly a structural change. So looking at the watch list on the left-hand panel, we can see a range of subheadings. Now, some of these I've created recently and others were defined by default, and it is possible to delete some of the default ones. But let's just look at some of the ones I manually created. So the first one is the technology sector. So in terms of the technology-based stocks that I have listed, and it's only two for now, but we can see Intel is a dividend-based stock, whereas Tesla is not. And as I mentioned in the past, we don't always have to look at companies that solely pay dividends. It's perfectly fine to have stocks which do not pay dividends, but that you believe in the fundamentals of the company. So technology will definitely expand, and generally I do favor technology-based stocks, but in terms of buying opportunities, they're quite limited at the moment. Even with Intel, we can see on the graph here, although it is dropping, we have some alerts in the $49 range. That could sort of happen in the next couple of weeks, but we shall see. So that's it for the technology for now. The next one I want to look into is actually the REIT. So within the REIT section, I have this first one named Realty Income. Now, this is actually an interesting stock that caught my eye recently. So looking at the 1 week graph, we can see it has this very nice pattern where it's almost linear but slightly curved upwards, and this is a stock that has been performing very well since sort of early 2018, and there hasn't been any significant drops. So in terms of their dividend payout, it's around just slightly under 3.5%, which isn't amazing. It's not terrible either. But I just really like how the stock has performed over the last year and a half, and it's one that I'm keeping an eye on. One thing to call out is that it's one of the highest points it's ever been, and in terms of the next buying opportunity, there's two alerts right here, $72 mark and the 68. So hoping to enter at one of those price points. So I'll keep you updated if I ever buy any of Realty Income. The next REIT is the Vanguard REIT, and this is just an index tracker. I haven't felt the urge to buy this tracker at the moment. It's very high right now. Let's just go on to the 1 week view. So again, performing pretty well. Sort of January did have quite a large dip back in December of last year, but it's an all-time high, and it's not really moving anywhere. So I don't think there's any buying opportunities at the moment, and just more interested in the top REIT. But in saying that, I mean, Vanguard is generally a good index tracker, so I definitely want to keep it in my list within the REITs. Okay, and then the next one to look at is telecom. So I added two companies, Verizon, which if we just have a look at the graph, let's just change some of the views. I always like the candlestick. So this one isn't actually too bad. I kind of liked how the underlying stock hasn't really increased significantly since late October of last year. So this time last year, it's had this sort of up-down cycle, not really going anywhere. So I think there is a buying opportunity, and I've only set one alert, which is at just under $56. I do suspect this to drop back down again, and that's just a nice buying opportunity. So yeah, that was the main reason. I just felt like there is a chance to buy into Verizon. And again, both of these stocks pay dividends. I can't remember the exact numbers. I have to sort of double check every time. But in terms of AT&T as well, it's at a lower price entry, which is always nice. I have a couple of alerts, and let's just first of all zoom out, give the 1 week view. So the stock has not been performing well. We can see that I've got 2 alerts here, so that's just based on the analysis. So if I zoom in a little bit more on the day graph, we have this again up-day kind of cycle, quite an easy buy opportunity in the near future at the just under the $37 mark. And in terms of if the market has a significant drop, the next sort of resistive point is at the mid $34 mark. So yeah, more interested actually in Verizon as a buying opportunity, just because it's been quite stable, and I'm not, in the short term, I'm not worried about increases in the underlying stock. I would much rather buy a stock that is quite constant in nature, and that just allows me to have more buying opportunities in the future. At the same time, I still like stocks that, just as we saw in the very first stock, that has this almost linear, slightly higher linear growth, and that also gives confidence that in the future the same trajectory will take place. So that's it for the telecoms right now. We also have the banking sector, and as some of you are aware, you can probably see, well, my portfolio, I have the Lloyds banking, and I think I previously spoke about Wells Fargo. I have some alerts on that one there, and then HSBC. So these are all relatively safe dividend paying stocks, and there hasn't been sort of any buying opportunities. So if we quickly look at HSBC, we have, look, it's been quite volatile, not massive amount of movement, but I do suspect that at some point I can sort of get HSBC at a much lower price point than the current market. Almost reached the price recently, but yeah, we'll keep a track on that one. In terms of Lloyds, not too much action going on there. I do suspect that there will be buying opportunities again. I've got an alert of $49, so we'll see if those are triggered. Okay, and so for Wells Fargo, I actually take back what I said earlier. I don't have any alerts right now, but I will, in my own time, analyze when is a good sort of opportunity. We can see October the 2nd, so a few days ago, there was quite a significant drop, but the day was positive, so it could be a buying opportunity there. If not, we go way back in August. Yeah, it's one of these 2 points here that are good buying opportunities. Just want to zoom out, look at the week graph. So it really hasn't been performing too well, but that's not to say that the stock won't perform well, and we are focusing on dividend-based stocks as well. So never too worried to kind of buy into a company that has had this sort of low point, but has opportunity to increase in the future. So that's it for the banking sector. The final one is for retail. So looking into Costco here. Now, the price point is very high and market is at an all-time high. But if we zoom further out, this stock has just been performing pretty well in the long run. So from 2017, $155, it's close to doubling in the space of 2 years. Had this low point around mid to late 2018, but bounced back. And I do have an alert for 264 mark, given that back in August. So there is a chance that the market will drop again. I wouldn't feel comfortable buying at any higher price than the alert set at the $264 mark, and I do suspect at some point or another the market will drop potentially even further down. Yeah, that's that for Costco. And then Walgreen Boots, all-time favorite. So let's just close out some of the charts and let's open up Walgreen Boots. So just going onto the candlestick, zooming out. Now, I say an all-time favourite just because I've been buying into it recently. It's had a period from March of 2019, and it's just been, again, not really moving anywhere. So we can illustrate that a little bit better if we just draw some lines. So I've got a line on the lowest price points in recent times, and let's just add another line. One at the top here. So you can see that it broke resistance back in early 2019 has just bounced between these two lines, really hasn't gone anywhere. And so I do have an alert at the sort of lowest resistive level here, so 49.48. Definitely looks like it's about to hit that line, and yeah, definitely will be some buying opportunities. In terms of the health of the company, it's not been good. Looking at the 1 week and even the 1 month, I mean, that is pretty terrible. But I mean, you take gambles with some stocks. In this case, it's definitely hit a low point, and there is a chance that it could reach some of these high levels in the future. But pretty happy with the dividend payout right now, and should the price keep bouncing within the price range that we can see here, then equally I'm happy with that as well. So those are just a little bit more in depth of some of the stocks that I've added recently. The main takeaway is that I've structured my account. There is a bit of noise in terms of the default subheadings that Train 212 generates. I'll look into filtering those ones out. But in terms of the ones that I showed, those ones were manually added, and I actually added them just on the mobile app, but you can see down here, add a new watch list, add the name in, that will be created. So, and equally, delete the watch list. Yeah, the main thing is to have some level of structure. The way I had it in the past was just having one big dividends based tab. That just didn't make sense, having pretty much every stock that I'm looking into. So yeah, I will be adding more in the future, and obviously adding more stocks to the individual subheadings. But I don't want to have too many stocks that I'm focused on. I want to really be picky with the stocks that I buy into. If I'm honest, I haven't done so far. You know, Walgreen Boots, liked it just based on the dividend payout. With Lloyd's as well, it was such a low price entry that, and combined with the dividends, it just made complete sense. With HP, that was a free stock. But yeah, it's just good to have a level of structure. And in terms of how I'm setting alerts as well, I generally just do a maximum of 2 alerts for a given stock. We saw some examples earlier. With other ones, I only set 1 alert, and that just simplifies things for me. On top of that, I also can do a stop limit order. So when you actually buy in the underlying stock, you can select limit, and you can, after you select the number of shares, if this is going to allow me to, I can also enter the price point that I want to pay. So that is you can see here the maximum price you're willing to pay per share. So the stop limit, I don't use any of the other features. Stop limit is what I always use. And if you have enough funds in your account, you're able to execute the order without actually being there. So I like to have the alert just for the fun of it, to see if my observations have been correct. But at the same time, I have started to set a stop limit, and that just executes the trade. So just looking into ways to automate this process, having a bit more of a hands-off approach when it comes to executing the order. And most of the work is pretty much in the analysis. Yeah, so I'll leave it as that, and I will catch you in the next one.